Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In fact, very happy US CPI day. In today's program, you've guessed it, I want to have a quick preview of this huge event happening today, which the market has been waiting for over the last 48 hours, and discuss a little bit about the potential impacts and why this is so important today. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, today's video is called Storm on the Horizon, because let's face it, over the last 2 days, the market has been trading fairly range-bound sideways because they have been waiting for this event. Now, just going to do a quick thing about the German CPI. That came out today, okay? This is totally overshadowed by the US CPI, obviously. But the German CPI came in year on year and it was announced as expected at 8.5%, which is the same reading of last month. But like I say, that takes a back seat today because it's all about the US Consumer Price Index. Okay, this is the big one this week. Now, it is expected to come in at 8.7%, lower than last month's reading, which came in a shocking number at 9.1%. 9.1%. Obviously, we all know we are dealing with a huge inflation crisis across the globe at the moment. So obviously, the US CPI is going to be a major market, potentially a major market mover, because it is all about the Fed. But anyway, we'll talk a bit more about that in a minute. Now, like I say, expect to come in the headline inflation, which is the year on year, okay, not the core. I'll tell you what the difference is between the core and the headline. Expected to drop due to the recent fall in oil prices. Yeah, okay. Now, I can understand that anticipation on that because, yes, we have seen a drop in oil prices over the last period of time. So yes, that could be a factor in the fact that we could get a slightly lower reading on the year-on-year CPI. So it could be coming lower at 8.7. But this is the thing. This is the thing I have to question. First of all, let's have a quick look at oil. Okay. Now we all know oil has been under pressure. This is on a daily. Okay, it's currently under pressure because obviously, like I mentioned in a previous video, there is demand concerns. Not only about supply and demand concerns, plus obviously the Iranian talks are proceeding better than expected at the moment. I'd say the deal's not over the line yet, but it's looking quite positive. And if, of course, deal is made, then that, of course, will increase the supply of oil onto the market. And so, yeah, that's the thing. So this is oil. This is on a daily. But this is my question I have to look at. So we're saying, because oil prices have dropped, then we should expect a lower CPI. But if we have a look at it, this is on a weekly. We can see oil has been sort of fairly under pressure over the last couple of weeks since sort of like maybe around about May. And we've seen an increase in CPI. I know it's not an instant thing, as soon as oil prices drop, instant, drop in inflation either. But I'm just questioning whether or not we are going to see 8.7 or lower, where inflation is peaked. Bear in mind that oil prices have dropped over the last couple of months and it hasn't made a difference. Again, like I say, I know it's not instant, but anyway, that's just one of the factors I'm thinking about. But the other thing is the market has got this number wrong quite a few times already. Now, if we go back, okay, so let's go back over last 4 months, okay? And like I say, around about April, May, oil prices start to drop, okay? So March, the anticipation on expected year-on-year reading was 8.4%. It came in at 8.5%, okay? April, the expectation was 8.1%. It came in 8.3%. May, expectation was 8.3%. It came in at 8.6%. July, last month's reading, 8.8% was the expectation. The reading came in at 9.1%. So, okay, I can see there's a lot of excitement that we might see a peak in year on year, and they believe it's going to come in lower. But like I said, they've got it wrong over the last 4 months. The last time they got it right was February when they said 7.9, and it did come in at 7.9. So anyway, but the other thing that's happening, of course, is we got core CPI year on year. Now, core is something that the Fed tends to pay a lot more attention to. The reason why that is because core doesn't take in the account oil and food. Okay, it basically takes in the change in price of material goods and other goods which we buy. Okay, like clothing, watches, for example, phones, you name it, goods for the home, whatever. So it doesn't take into oil and it doesn't take into food. However, the core CPI year on year is expected to come in higher than expected at 6.1% against the previous reading of 5.9%. That's not a good sign either. The core is important. And if we look at, because we actually have 4 CPI readings today. So we have core CPI year on year, 8.7, core CPI month on month, 0.2. Don't forget, those two take into account oil prices and food. Then US core CPI year on year, expected at 6.1, and US core CPI month on month, expected at 0.5%. Both the core are higher than previous numbers, okay, and higher than previous numbers, which does make me think, because I think it's going to be, though, the year on year, the headline, the 8.7%, that's going to take all the headlines, but it's the core which is going to be really important to the market, really important to the market. So we have to keep a close eye on the core. It's all about the core. Anyway, because all this, of course, leads to the fact that it's all about the Fed. It leads to this. This is why the market is so anticipating this event. This is why the market's been on the edge of its seats for the last couple of days because of this event. Because after that amazing, shocking, shall I say, non-farm payroll reading we had last Friday, which came in at 528 versus 250, with a high CPI reading, the market is expecting the Fed to be aggressive again with interest rates. So another 75, or even if it's above 8.7, maybe 9 plus, then maybe even 100. Like I said yesterday, Citibank expects a high reading, or hot reading as they call it. They expect 100 basic points. And we all know, I've said this times and times again, the reason why the market is nervous about the Fed being aggressive is they don't think the market can handle it, and it will tip us into a full-blown recession. So this is what concerns them. So like I say, this is a big event. We're building up to this. And because of this, obviously, as you all know, I will be doing a tixee Live watch along on this announcement, okay, on Wednesday. Of course, it's Wednesday. It's today. I'll be doing it on today. I just forgot to change that text bit. So I'll be doing this, the watch along today at 12:20 p.m. UTC. The announcement comes out at 12:30 p.m. UTC, but I'll be going on 10 minutes beforehand, like I always do, so we can have a good chat about it, go and dissect it a bit more, talk about potential scenarios, what the market happened to the market, and then we watch it live. So yeah, please come and join me for that. Don't forget, 12:20 p.m. UTC. Now, let's have a quick look and see how the market is at the moment. We looked at oil, obviously. The euro, we go on a 30-minute, not a weekly. We're not interested in looking at it weekly at the moment. Like I say, fairly sideways. Currently trading at 1.02055. It is above the 200-day moving average, which is giving it a little bit of buying support. But if we look in the daily, you can see that, yeah, it's been fair. It's been fairly sideways because it's all waiting for this event today. It's waiting for the announcement today. If we look at the cable again as well, cable is under pressure. Look at it. It's on a daily again. It's getting close to that key level of 1.20034. Fairly sideways though over the last couple of days. Look at that. Hasn't been a lot of activity. If you look at the dollar yen, and this is going to be another pair we're going to watch on the back of the announcement. Slightly lower than yesterday, just below the 135 level. Tested a key area now, 134.70. The S&P 500, again, this is on a daily. As you can see, it's been fairly tepid, fairly sideways, trading above that key level of 4,099 points. And again, gold, again, is still hovering around that key level. So gold is waiting for this announcement. The whole market is waiting for this announcement. Like I say, currently testing that key level 1,000. do apologize. I got really dry, so apologies. Trading at that key level, $1,791.29. So as expected, the market is pretty sideways, but we would expect that. But like I say, it's all about this. It's all about this. So come and join me. Other things to sign the week out as well. After US CPI today, we got US initial claims tomorrow, UK GDP, which is supposed to come in as a negative reading, and US Michigan sentiment. So both of those are key events. Market as it stands, FTSE is currently down slightly lower, negative 0.07%. DAX currently trading slightly higher, 0.16%, and Eurostoxx 50 currently trading at 0.11%. So there we have it. Don't forget, you guys can, ladies, of course, can ask me questions anytime you wish. This is what I'm here for. Also, simply say hello if you like. Ask me how, or show me your opinion. What do you think about the CPI? Are you excited as much as I am and as much as the market is? Let's hope it is going to be a big event. It'd be really disappointing if all this build up and it turned out to be, a damp squib, doesn't it? You know what I mean? And it's nothing happens. But no, I think something will happen. So it should be exciting. But it'd be interesting to see. Okie doke. Don't forget, you can always ask me questions later. If you think of a question later on, you can always put it in the comment section on either Facebook or YouTube. I will see them and I will reply to them next time I'm online. So you do have that as an option as well. Okie dokie. On that note, there's no questions. Don't forget, I'm back on again at 12:20 p.m. UTC for the watch along, and I'll begin on again later this afternoon around 2 p.m. UTC to just cover the US Open and the US trade, what to expect. And we will do a review of the CPI. Plus, we have Disney. Their earnings are coming out tonight, so we'll discuss that as well. Right, so like I always say, if you're watching me on Facebook and you quite enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this little episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you put up with me, my over-the-top enthusiasm for the markets, give me one of those. It's nice to know that you like what I do. I see I've got a couple of likes. And I love heart. It's very nice. Thank you. I really appreciate it. But it's really nice to know that you like what I do. But anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.